Friday, November 3rd, market analysis, Stan Ehrlich. Wow, I did not expect to see 375-point rally in the E-mini December futures contract from the October lows exactly 1 week ago last Friday. It's a huge rally and has gone from oversold conditions to almost overbought conditions, now approaching a significant resistance area all of a sudden in 1 week. Very quick, huge rally. And we have problems below in some of the other indexes, but not the futures because they aren't closed as much time frame as the Spider, the DIA, the Qs, and the Russell. So we'll look at those in a moment. This is close to topping out short term, only for a few days, maybe a week or so, but we could still get up to this resistance line. There's a possibility we could still hit 44.33 before the end of the day. That would be exhaustion strength, in my opinion, up into a resistance area. And I'm going to be saying these kinds of things about the other indexes or something very similar in a matter of a few minutes. So if you are long, get prepared to get out with whatever technique you like to use. But we're probably entering a short-term rally high phase, and we're going to slip back down to close some gaps on the other charts. So, okay, let's go. Spider, 2 big gaps in the last 2 days. This morning it gapped up again, and yesterday it gapped up substantially, and even the day before that you left a little bit of a gap behind. Okay, we are now in a resistance area and well into it. We are now 71.5 RSI, getting close to my custom of 75 or higher on my RSI index, which is a custom RSI. It's not exactly the same as what Wells Wilder taught me himself. I learned the stuff from him in the 70s and 80s. And it's just my variation. But it basically is relative strength. Now, I have a few different factors that are different besides the look on the RSI index now, and it's available. The market is close to, I think, very, very close to a rally high. Maybe it's going to challenge the highs that we saw back here on October 17th. That would not surprise me. What would be getting over that on a closing basis and flying straight up next week, even a lot more. That would surprise me. So I'm thinking, maybe 438 could be today, maybe Monday morning. But that looks highly likely. In fact, about where we are right now would be pretty decent as far as a spot to stop rallying and turn back down again. But I don't see any evidence of that. How about looking at the 1-minute chart? We are high and last for the SPY, and this is last Friday's low way over here in the bottom left. This thing has just climbed like crazy all week. Monday, Tuesday, Wednesday, Thursday, and today, Friday. We have gone from within a couple of points of my minimum downside objective in the October low chart I'll show you in a moment, which was 407.5 down to 406. We got down to 409. And we are now 436 almost, 435.90. I think that could be high and last. It just won't stop so far, but I think it's very close to doing so. How about the Qs? QQQ, very close to the major bear trend line, which has basically 1, 2, 3, 4, 5 different points and maybe 6 coming up. These gaps below the market in the Qs are about the same as the Spider. So there's very little chance, in my opinion, we're going to come all the way down and close the gap from Tuesday to Wednesday. But the gap between Wednesday and Thursday is very big and not that far down, and seems to be the highly likely zone in which I'm expecting next week's downside retracement to come down into. And that would be down to about 357.5-ish. It could be a little bit more than that, a point or two, but not much. And then I expect it to turn back up and make new highs completely, and then a week or two to follow. Next chart is the NASDAQ futures. We have not only come back up into this downward slanting wedge or pennant, or you might make a case for a downward slanting channel. They're all basically the same kind of formation. formations that slant downwards, generally speaking, break out to the upside, end up being bottom formations or the perpetuation of a bull move. And this one looks like it's going to end up doing exactly that soon. So we may very well get overbought, bounce off of that resistance line, the bear trend line, pull back and start to rally again. But this is a futures contract, so we don't have any gaps here. But look at this. We got the DIA, big up gap today, right smack dab at the old high that we had again on the 17th of October. Definite resistance, and a little bit higher than that, there's another resistance area that I've been letting sit here for that line for many months. I don't know how many months. So we're in about the zone here for it to stall out. I expect that gap to be closed 338 and 50 sometime next week on a downside retracement that could be a great buying opportunity. And I cannot really rule out 333 and a half. Next chart. But I am very bullish. This is a very good start to the October lows, November rally. Then you get the Santa Claus buying opportunity right before Christmas. And I'm going to detail that in the YouTubes to come to the exact minute and date. A couple of years ago, it made over $3,000 in the Santa Claus rally. Last year it was poor, but it made a little bit of money. Let's see what happens this year. It looks like a prime target actually to do very, very well this year, but you never know. So we may even get up to close this old gap. I should drag this resistance or this gap marker to the right more. Yeah, 179, I guess. But I think that's a little bit of a stretch. So for this Russell chart, which just made new lows on one day for a 3-year period only a week ago. And here we are way up here already, leaving 2 large gaps behind. So the gaps are usually closed, almost always closed, but the breakaway gaps, which the one on Tuesday, Wednesday could have been, are a little less likely. And now it's quite a bit distance down. So next chart, we got the Qs, 1 minute, almost making new highs. Wow. Okay, let's look at that October chart, October low chart that I've been showing you for, well, I don't know, 2 months now, give or take. And I outlined in detail every single October low going back to October 8th of 1993 and the far left. So there was a low on October 8th, October 9th, October 10th the next year, October 29th the next year, October 28th, October 8th, October 18, October 18 again. This is ridiculous. We have had 3 years where the October low happened a little bit before October or slightly after October, and the rest of the 31 years now back past tense because October's over, 31 of them out of, excuse me, where am I going with this? Yeah, out of the 31 years, we've only had 3. And that's a better than a 90% return odds. So next year, I'm looking forward again. Next chart is going to be futures. Okay, a different perspective on the perpetual or continuation contract of the same thing on the E-mini. Now going through a resistance line, back up into the previous top formation, which by the way, for the E-mini overall, except for the 2-week period where it gave me a lot of trouble being above the neckline, it shouldn't do that. And that's when I abandoned the formation. I didn't think it was going to work. But of course it did. So I shouldn't have done that. And it went almost all the way down to the minimum downside objective, which was about 41.10 or so, and bottomed out in oversold condition last Friday, around the bottom of a support area. And look at what it's done. Now, keep in mind, we're already above 70 on the RSI, and it doesn't take too much more to get to my official overbought condition. And maybe I'll get another sell signal, a red bearish engulfing. Exactly the 3 of them that we got at the top of the E-mini, including, of course, July 27th, the top day. And you got to know, October 13th last year, we did get a buy signal at the bottom of the bear market. Next chart, NASDAQ. We almost sold the high day on the top We got the low day on the bottom formation of the NASDAQ, which didn't turn out to be a very good head and shoulder bottom. But not only on October 13th did we get a whopping buy signal, but we got another one, which really started the bull market on January 6th of 23. So these signals, which I've developed over decades, it's been 50, yeah, boy, I can say 53, I guess now, years in the business. October issue of 1971, runner on the old mercantile exchange on Franklin Street, which had chalk boards. Boy, date myself. Now, this is great. I didn't expect the October low to be quite this good. Well, let's go to the next chart. Bonds and 10-year notes are doing exactly what I hoped they would, except for fiddling around for about a week down here. Remember, one of my favorite sayings is you can never make the market do what you want it to do. You always have to move with it. And if you don't, of course, you're going to get stopped out of stuff like crazy and you're going to be wrong too much, et cetera, et cetera. So we got a buy signal at the bottom of the 10-year notes and the bonds. This is the bonds to the exact day. And now it's getting overbought. But we've cleared one resistance level, which is the high that was made on October 12th. Next stopping point is going to be approximately 119. We're already 14. So after a minor downside correction with the stock market indexes next week, and maybe take a week or two, then up into that range I just said, 119. Next chart's 10-year notes. Same situation. We bought almost the low of the move on October 23 in the notes, and it's very sharply higher at its high today and making new highs since about a month ago, a little over that, a month and a half. Excuse me, a month and a week. So that's great. After a correction, because we're now overbought, take us several days to maybe a week or two at the very most. We should then start to push up late November, maybe even very early October, December, doggone it, back in time, to the resistance area at 110, 111. Next chart, crude oil. Looks like it's going to break support. I haven't been very certain about this for a few days, so I'm just going to let it go again, not making much commentary about it, except if the support goes bye-bye and we start closing below 79.80-ish, it'll probably drop off sharply and get to at least 73.30, and that won't take long, a few days. It looks like, that's ambiguous as hell, that it's about to do it. Next chart. Today is Friday, remember. Sometimes some weird things happen on Fridays. The end of the week, you can't do anything for 2 days in the market usually. And sometimes people like to bail out of bad positions or maybe take profits on good ones, whatever. We had a great trade on the short side of natural gas. We're out approximately a week ago, and the market's still going sideways. Again, like crude, I'm going to pass on the commentary here for the moment. We'll see what happens next. Now, heating oil. Outside down day today, bearish engulfing. That indicates probably a decline, which would at least come down to 2.86. And I don't think it's going to have much trouble getting down to 2.7. So I'm mildly bearish for the moment for a few days on the heating oil. And there could very well have been, oh my God, that's right. Ladies and gentlemen, this could be a head and shoulder top. I just realized that yesterday and today's high is in the price range almost exactly where the first shoulder happened, which was on October 9th. I'm sorry, head and shoulders are my favorite technical analysis pattern. I've seen probably thousands of them in the 53 years. Daily charts, weekly charts, 1-minute charts, 5-minute, hourly, you name the time frame, I can see the pattern very quickly and easily. This is very typical. A slight downward slanted neckline is okay. I'm not going to take the time right now to measure the downside objective, but you will go from the highest high, which was on September 14th, straight vertically down to the neckline, which would be about 2.76. That distance, you should take whatever number of points it is and drop it below the neckline in a couple of days from now and see how far down it goes. And that's going to get you down to approximately, wow, the major historical support area. I'm going to say below 2.1 or about 2.1. That is my downside objective at the moment. I'll have to adjust that a little bit early next week. It's still far away. It's going to take a month or two. for it to get down there if it works correctly. But that's the first shoulder high. That's the second shoulder high. That's the top of the formation, obviously. That's the first shoulder on the right-hand side, and this is the second shoulder today. Bearish engulfing. The rally high is almost exactly the same price as the first shoulder. Typical textbook. The second shoulder high is very, very close to the second shoulder, first shoulder on the right-hand side. It's relatively symmetrical. I have no problems with this being a head and shoulder top at this point. I saw it coming weeks ago. I talked about the possibility. I didn't think it was really going to happen, but here it is. Next chart, gold. Sold almost a high day. Today was the attempt to prove me wrong. Doesn't look like, I hope it's going to happen. So rally failed this morning, and we're now back down to almost unchanged. If we can close a little bit softer, maybe a little bit lower on the day, I'd like that very much. But this is okay. I just don't want to go above today's high. And certainly my fail safe is, I'm not short anything anyhow, anyway, if it gets above the high of the reversal, which was again on Tuesday. So looking for new lows very shortly, and I don't rule out it going all the way back down to this red zone, which was an old gap from, guess what, the buy, green on the bottom. We have had some fabulous signals in the precious metals this year. Unbelievable. I hope I can repeat it. I doubt it. Pick the bottom, pick the bottom, pick the top in gold. Next chart is, come on. We sold and made a little bit of money, very little, but we got the bottom of that huge break in the beginning of a big rally in silver. And we got both highs on the double top. Then we got the low on the break, April 26th, that's right. And we got the top of the July rally. And we got almost the bottom on the August low. And we almost got the exact high in the September 1st high. Now, we've recently had a sell signal that didn't work, but they are part of topping out and bottoming out formations, often, not always. So I think we're going to roll over and start to make new lows and eat our way into this little support area and then down to all the way down to 20.7 or so, and we'll see what happens after that. Even though today is an outside up day of bullish engulfing, I still say that it's probably going to rally a little bit more, fail, and then I'm going to get my new lows. So I'm going to have to wait a little bit. This could very well be a little bit more strength before it nosedives. So platinum, overbought at the top. Unfortunately, no signal per se, but we did catch the bottom and the top and almost the bottom and that one too. So the last three bottoms, we've got buy signals involved, including the exact low day on the last one. And one of the last 2 or 3 significant highs, we have a sell signal smack dab on top. Next chart. Well, let me finish this. Platinum does not have a bullish engulfing. It's just got a little rally, not quite overbought yet. Again, there might be a little bit more strength to try to close this gap up here in the red zone, and that means it might try to reach up to 973 or 4 before it turns down. So not quite too sure about that. High-grade copper, bullish engulfing today at the moment. Remember, it has to stay above the close of the previous day to maintain a bullish engulfing. Otherwise, it's a bearish engulfing and a total flip-flop from a technical standpoint. Seems crazy to fundamental people that just because it turns out to be a higher or lower close, it makes a black and white difference. But it does for a technician's standpoint. We bought the bottom, bullish engulfing, ER buy signal. We sold the top, bearish engulfing, ER sell signal. Back here, we bought the bottom. Next chart, soybeans. Very strong rally today. We bought the bottom, October 12th. And we sold almost the top. So I can't, what? Should I keep on repeating it? No, okay, stop. So this rally should follow through. We're getting close to overbought, but I'm thinking it may be able to come up to this little resistance line that I drew. I don't think that's all that important, frankly. I'm not sure where this darn thing is going to stop. Could very well carry itself back up to 14.10, 14.15, something like that. Next chart. Wow. We are still short soybean oil. We got a trade that's doing I lost words for it. It's just fabulous. It's just continuing to trend lower. Our minimum downside objective was 50. I said it could go further. Here it is. But wait a second, ladies and gentlemen, we've got oversold conditions and we've got a bearish engulfing. This is a reversal that I've talked about. I don't know if it's particularly that reliable, but I've seen it many times. I don't think it's something that you should really take action on at this particular point, but I have nicknamed it a bass-backwards reversal because it's an outside down day, which usually means the market's going to go lower. But it's an oversold condition, plus the fact that I've got an objective fulfilled at 50 and now lower at 49.16. And we're still short. Well, that doesn't really matter. From the high day on a double top formation, it's a heck of a great trade in soybean oil. So this could be about ready to turn back up again. I thought it was turning back up yesterday, and I said that, but it didn't. But you know, let's see what happens next week. I'd stay short if you're short, and just tighten your stops up. Next chart, soybean meal, bearish engulfing yesterday. Didn't work at all. Okay, we have a day trade loss today, and probably a small loss yesterday also on the ER1 and ER3 signals, period. But remember, our fail-safe was the yellow dots. We never, ever get on the other side of the yellow dots without getting out if you are in a trade in the first place, because it means that's our trailing stop. It means you're just plain having a bad day. So what am I going to do with this? Shut the heck up for another day. Next, corn. Oh, how about this? Well, new lows, but by a smidgen, hardly anything to speak of. Coming down almost exactly. Wow, what was the low here? 467.68. Today, the low is 468, a couple of ticks above the low back on September 19th. Prime, excuse me, prime situation for a double bottom. Now remember, this wasn't all that long ago, September 19th, and here we are November 3rd, 6 weeks. So this could end up being a double bottom. This is exactly how they could start. I've got to mention it. We got to get up to the resistance first, obviously, break through the resistance at 497, and then start closing above the high, which was only on October 20th. Then you've got yourself a double bottom, and you can make some measurements as to how high it's going to go. I'll just eyeball this real quick. Probably something in the ballpark of, I don't know, back toward the highs that we had back in July. Maybe not quite that high, but at a minimum, it looks to me like, 560, I'll mention. Okay, I got to turn bullish. Today, I'm turning bullish on corn. I didn't expect to say that, but here we are. Next, wheat. Rallying a little bit. Nothing particularly interesting. Don't have any other new news. Sideways to lower. Next, cattle. We had a buy signal 2 days ago. We had an ER1 fill. Of course, every time you see red or green, you're long or short ER1 on the red or green day, period. If you can get the ER3 filled, and on a rally, we got short at the red dot on September 20th. And with this buy signal a couple days ago, Tuesday of this week, we got long on a dip for ER3 at 183.329 or so. Yeah, exactly. And it's a slight profit at the moment, but I don't like the outside down day we've got right now. That could be a little bit of a problem. Well, supposedly you're following the rules and using your trailing stop, and it may turn out to be a small losing trade. It may turn out to be a really good one. Can't really tell at the moment. Got to follow my rules. We're long because of the bullish engulfing. We were very oversold. The market came up to and through resistance. So we'll see what happens next. Next chart is hogs. We got the bottom. Almost. And that was a week and a half ago, 2 weeks ago. And this is coming around very nicely. Big down day today, but we're not out and just getting close to taking a profit. We'll see what happens next. So I'm still bullish, but I have to tell you, we did stop in a resistance area and it's turning back down. So we might get stopped out of our long trade. We might not. Let's see what happens next. OJ, oh my God, ladies and gentlemen, I told you on Monday of this week about this gigantic bearish red engulfing. I don't see these things being so profound very often. And I screamed bloody murder on October 31st. So 1 day down, 2 days down, 3 days down, and already we're getting oversold. Can't believe it was that fast. This is a whopping great trade for ER1. Never had enough strength rally to get to ER3, a new short sale there, but we missed it. ER1 is short from a little bit below the previous day than the red. And what the hell can I say? If you don't follow the signals and believe in your system, good luck. And we have a new high for the trend in cocoa. Overbought. Basically, I'm waiting for another correction down. The last one was almost perfect. I mentioned before it got down to the blue or cyan line that was a good spot for it to stop. Although I included a little bit more below it as possibilities, it did stop, at the highest level I was looking at. Kind of surprised it did that. But new high ground here. You can't help it. Bull markets get periodically overbought, maybe very overbought. This is exactly what bull markets do. So I'm intermediate to longer term bullish. Short term overbought. So probably another little dip down again. Next chart is coffee. Hey, it blew through resistance like crazy. This is a bullish breakout of some significance. Now it's got to stay above the old high, which is a bearish engulfing signal, which you could have made a little money with, but our system did lose a slight bit, less than half a point, I think it was, with the ER1 short. Yeah, very small, disappointing. Oh, I'm sorry. This is an ER1. It's logging in the entrance incorrectly. I apologize. That's where we got short. And so there was more elbow room to take a profit. We'll correct that. Next, bullish engulfing. No, sorry. What are we? Sugar, about to break out to the upside, much like cocoa. Not overbought yet, not even that close. It looks to me like sugar might be ready to have another real healthy shot up again. Another, I don't know, penny or two. Pretty good rally, maybe. Next, oversold conditions, 3 days in a row, cotton, coming close to the significant support area. I probably should draw that in for you right now. I haven't done this for a few weeks, so I'll just grab the little resistance and go back to here real quick. And that's probably too low. Oh, I like that a lot. That goes right back to that low. Perfect. And the bottom probably should come up to about in here. Whoops, didn't grab it. Okay, and we'll move it up to about right there. Yeah, so we're just barely getting into it. Let's see what happens the next few days. It might on Monday, Tuesday, Wednesday drop off a little bit more, but it's almost it should be ready to start rallying very soon. Next chart. Back to the E-mini, guys. Okay, 30 minutes, 31 minutes into this. Looking great. Remember, I'm thinking we're very close to a rally high in the stock market indexes to go back down and close the gaps. You guys have a great weekend. I had a great week this week with my October lows. Mañana, or Monday,